What's up, everybody? Christian here from the DeFi After Party. And today I got AJ on the line, AJ Brockman. And what we want to discuss here is something that is mind-blowingly blowing up right now. I think that's a cool term, mind-blowingly blow up, AJ. Um,
Yeah, bro, totally.
let me share the screen, and if you're watching this video, more than likely you've already you've been doing some research about the bonds, or you know about them, or DexFi, and so we're not gonna go entirely into who, what, where, when, why about that kind of stuff, but let's just bring up the site here and let's talk about the bonds, AJ. Um, the bonds are literally blowing up. I remember first seeing when it got released, I think the TVL was like at 130, something like that.
For sure. Yeah,
Um,
man. Yeah. So yeah, first of all, thanks for having me, Christian. And yeah, bro, these bonds have been kind of the pinnacle of what we've been trying to do for the last, 3.5, 4 years now. So this is all built on top of Dex Finance. And what we're doing is, again, not to get too in the weeds, but we are creating what we call concentrated liquidity pools, and we're utilizing V3 technology to create yield. So to again try to simplify that as much as possible, this is real yield that we are putting capital to work in different cryptocurrencies where we're earning part of the swap fees from every single exchange that happens with those two assets. So it's we built this underlying technology that automates all this through Dex Finance, and anybody can go and do this on their own as well. But we released the bonds about 3 weeks ago, and this truly is the easy button. So you're essentially minting bonds, that capital. It's ETH-in, ETH-out. That ETH is then put to work through different LP positions, and we earn fees from every single trade that happens in that LP position, and that is then paid out in USDC to everybody else. So, or everybody that's in bonds rather. So, to your point, bro, we started with about 150 thousand TVL. Now we're upwards of almost 900,000. And that was with Ethereum taking a pretty big hit over the last 48 hours or so. So and APR is still, over 100%, which is a testament to how sustainable this is. And it's something that we've been doing for years, man. All the big OGs, all the crypto hedge funds, all the multimillionaires that are in crypto, they are doing this on their own. And so we are bringing that option to all of you that may not be as savvy or familiar with it, but still give you a way to earn from it for sure. So that's the elevator pitch. Sorry, I know it was a lot. We jump right in, man. Yeah. So
yeah, for sure. I mean, like I said, if you're watching this video, you're probably not the newest crypto investor or new to crypto whatsoever because you wouldn't be researching this kind of stuff, you know. Because I remember when I was, a noob, so to speak, like I didn't know about, uh, liquidity. I didn't know about yield or dexes or, sexes and all those kind of things. So
for
I
sure.
was just randomly watching stuff. And I mean, I did learn by randomly watching, but I wouldn't be, for example, researching treasury bonds or DexFi or EMP and all those type of things. So, if you're here, you're watching this, the reason I wanted to do this video was to AJ also too. Actually, you know what? This is what we're gonna do. This is what we're gonna do. This is one question I have 100% for sure. Is
Yes.
if what is the question that people should be asking about DexFi or the treasury bonds or the vaults? What is the question that really no one's asking that they should be asking? Like, is there some sort of alpha that people are not asking, or that has not been revealed yet. And I'm not saying you need to give us this alpha that's going to be ready in the future. I'm saying, like, what is going on right now? What is there some kind of like secret sauce we're overlooking here?
Yeah, bro, I love this question. So, the short answer is maybe a few things. So, I'm gonna just kind of go back and take a step back, and really give you the full picture. So, I think the question that people ask, or don't ask, which is very dangerous, especially in crypto, is where does the yield come from? So, we are all so caught up on Doge or Shiba Inu, or Pepe or even Bitcoin, where we have to buy the token and we have to hold that token and hope and pray that that token goes up in value to be able to make money. And that is what people think crypto is. And the reality is that is only a very, very small portion of crypto. And so we are at the forefront of what is called decentralized finance, where we are now taking control of what all the big banks and lenders and hedge funds and everything in the traditional market, um, TradFi, they've been doing this for years to make money on all of us. Now we can be in charge of our own positions and not have to pay a middleman to do that. So it's really, really powerful. And so again, the question people should be asking is where does the yield come from? And a lot of times if there is real yield, or even if people say there's yield, it's what we call a Ponzi scheme, where funds from new users are being used to pay old users. Not only is that really unsustainable, but it's also illegal. So there is that. And then also, even some protocols use inflation as what they call real yield, but is not real yield. So, if you mint more of a token, you are gaining value, but it's very unsustainable. So, what you just showed, if you go back to the vaults for a second, so we are actually, again, providing LP or liquidity to different exchanges, and earning a daily percentage from the volume. So, I know you were sorting there. I mean, look at Banker ETH, that one right there, that is earning roughly 3% daily in real yield from the fees, which is just almost too good to be true. So there is a lot of things that you have to take into account. Um, one of those is the range that you set. Again, not to get too much in the weeds, but the secret sauce is having a very tight range, but not too tight where you get what's called impermanent loss. And so with our vaults, we're able to manage a lot of that through our AI technology, or you can set the ranges yourself manually if you're more proficient. But you can see that those are not made up numbers. Those are real daily yield based on volume. And for that vault alone, you're looking at about $1 million of total liquidity. And so if there's $2-3 million of volume a day, we're getting a part of that fee on every single transaction. So does that help, Christian? I know it's a little bit overwhelming, but that is really how we're generating the yield for bonds in a little more specific terms. So
Yes, it does. And one of my superpowers, AJ, is being able to take information like this and then simplifying it or reiterating it in another way for people that are kind of green or new,
for sure.
don't really understand, they don't really get. So let me ask you some questions right here. And by the way, I'm no crypto expert whatsoever. I found crypto online roughly, I don't know, 5, 6, 7, 8 years ago or something like that, and invested, and then found AJ and EMP and DexFi, and here we are. So by no means am I any kind of expert, but I get a grasp on things, and I think if you get a grasp on things and then you take action and get in the game, you're ahead of pretty much 99% of the other people in this world. That being said, okay, so what I believe AJ was saying, AJ, at any time, stop me if I'm completely wrong.
For sure, brother. Yeah.
But what we're doing here, or what DexFi is doing here, and we'll start with the vaults, and then we'll kind of go circle back to the bonds, because basically the bonds is the easy button, as everybody's been calling it. Um, but what we're doing here, or what the vaults are doing here, is you're basically depositing money into the vaults, and then these vaults are all basically providing liquidity to the different exchanges. Is that right, AJ?
Yeah, 100%. Yep.
Okay. And so because essentially like if you look at Banker and Wheat, this is where, people are trying to, if you go to a Dex, an exchange, and you're trying to buy Banker or you're trying to buy ETH or Wheat as it says here, like there has to be both those pairs in order for you to basically exchange or buy or sell. Correct, AJ?
Yeah, bro. Perfect. Yep.
Okay. So what we're doing here is we're providing this money or these tokens to these different exchanges, and for doing so, the exchange then gives us rewards or fees that we're able to earn. So essentially, we're putting in money to earn money, right, AJ? That's basically what we're doing.
Yeah, bro. I mean, again, it's almost like you're investing or putting your capital to work in a real business. I mean, these exchanges, again, are creating revenue every single day from fees, and they cannot operate without us because they don't have enough money internally to provide their own liquidity, and so they're outsourcing essentially the liquidity providers and giving them a fee through a split of the fees to do that. So yeah, great analogy. Yeah.
Yeah, I mean, and the reason I bring this up is because I didn't grasp this concept, or I didn't understand what this was. Like, I understood liquidity was basically like how much money is there, but I didn't really know like what's it being used for, like how does it really work, blah blah blah, all these kind of things. And if you're new or you're green and you're like, okay, I'm kind of like grasping this now, like just remember, like right here, this solution, DexFi, that we're looking at right now, the vaults, is essentially like it's easy button. It's like one of the easy buttons where bonds is going to be the main easy button. But just stay with us here because I think explaining this will make you understand why bonds is just like even more powerful than what we're looking at here. So,
Yeah, I agree. Yep.
okay, so all right, we got that part down about we're providing liquidity and that's how we're making money with the vaults, right? And if you look at the different vaults, basically each vault is like, this is essentially the tokens that are being deposited in each vault or to each exchange. Okay, so there's a whole bunch. And we're not going to go through each one because that's really not the point of this video. What we do want to talk about though is when we are depositing, and by the way, here I'm not gonna do a deposit on this video, but we're just gonna kind of briefly go over this. But essentially, AJ, the way DexFi has simplified this is because if you were to do this manually, it'd be a pain in the ass, correct?
Yeah, man. So that is really the product market fit or proprietary technology that only we have is that we already were trying to simplify this even before bonds. Like you said, this is easy button number one. We'll talk about easy button number two in a second. But yeah, I mean, to back up, if you any of you can go to any exchange and provide LP on your own. They all have, different liquidity tabs, Uniswap, PancakeSwap, Aerodrome, all of those. But what happens is you have to number one, you have to know what vault is profitable or what LP is profitable rather, meaning you have to then go to a different website and look at volume, go to Dex Screener or any of the other indexing sites, see who does the most volume, who has the most liquidity, and spend hours researching that. Number two, you then have to pick the optimal ranges. Again, you can see even here, like that first one, Banker ETH, is a minus 15% and a plus 20. That means that you are providing liquidity within that range. So the price can go down 15% or the price can go up 20%. And as long as you're in that range, you're earning. So, but you would have to know that on your own, and look at the chart and, and select the range. It's, with our system, we have automated all of that. So it's still through a decentralized smart contract. Nobody is managing money for anybody. It's all on chain, and we use AI technology based on volume and news events and price ranges to be able to pick optimal ranges. And all you have to do is deposit into them. So there is still a little bit more work with this because you have to claim profit every day or every hour or whatever, depending on how much you have in. You still have to monitor the ranges because sometimes even with our technology, if there's a big move in the market, it may go out of the range, or maybe one of the vaults is just not performing, as well as some of the others. So again, there is a lot more expertise involved even with this. But if you are more familiar, this is one of the only solutions on the market right now that's called an ALM, or an automated liquidity manager. And we even take it a step further with the AI. So AILM in multiple assets. So yeah, does that explain, Christian? Yeah.
Yeah, it does. And by the way, again, I really don't even know too much about this stuff. Like I just recently found DexFi because of AJ. I got into the bonds because the bonds is really the super easy button. We'll get to that in a second. But after I got some rewards from the bonds, I'm like, you know what? I'm just gonna go stick some of this in a vault and see what happens. Because again, getting in the game is the bigger part of the story here. Like if you
For sure.
just sit on the sidelines, you're not in the game, right? So what I found was really easy, specifically for the vault, AJ, was like, okay, let's say we get into this vault. Like, I don't even know what this stuff on the left means. All I was focused on, AJ, was the stuff on the right, because I was
Yeah.
like, if I could deposit and I don't need to deposit Banker or SPX or Jizza or whatever it's called, I'm just
Yep.
gonna I'm just, if I had to do all that, I'm not gonna go buy all those tokens or do whatever to get them. And what I found was really cool was like I could just come over here and I don't have my wallet attached right now, but if you did, you could just come over here in the deposit tab, select an ETH, or I think USDC is another option, and then basically click how much you want to put in, and then it zaps it in and turns your funds into these different positions. Isn't that correct, AJ?
Yeah, man, that's a great point. So, yeah, even people that are savvy and know about liquidity positions and do it on their own, we are a massive time savings with that, because what Christian just said is, again, it sounds simple, but it's a game changer. So, if you wanted to participate in this, number one, you would never be able to have more than one position on your own. Like Banker ETH, you have to pick Banker ETH only. You have ETH SPX, you have to pick that only. With us, you can have, again, that's why they're called vaults, is because you have multiple LP positions in one vault. That is unheard of. So again, we combine the technology of balancer pools and beefy finance auto compounders into our own technology. So that alone is big. And sets us apart. But yeah, to your point, if you were doing this on your own, you have to go to an exchange, you have to take your ETH, you have to buy half Banker, half ETH, half, or I guess in this case, it would be what, like 20% each. So 20% ETH, 20% Banker, 20% ETH, 20% SPX, 20% Giza, 20% USDC, and then do all this manually. What I just explained would take probably 30 minutes. What you said, Christian, is, yeah, you literally go to the right over there, you pick ETH, you have, $1,000 worth of ETH, and it not only does it buy the tokens that you need, but it automatically creates the LP for you literally within 10 seconds. So it's a big time saver, even if you are familiar with LPs.
And you know what? Just to be straightforward with you, AJ, I I never knew anything about creating LPs, right? I that sounds like just a headache to me. I don't even
Yeah.
want to go look on YouTube for how to do that. That just sounds like a headache, right?
Yeah, bro,
Like
totally. And it is. It's, I mean, obviously we like it when people have an understanding of what it is. I mean, at your leisure, it's always good to know about how people are really making money in crypto. But it's a full-time job, Christian. I mean, you not only do you have to learn about it, but then you have to implement it. And just like, day trading or any other, YouTube video, there is risk involved too. Like, if you mess up, then you may lose some money because you're not familiar with how to really do this. So yeah, I would agree. I mean, it can be really really scary, even though we've made it as simple as possible. And I know where we're going here, but that's why bonds are so cool. But yeah, we'll get in that in a second.
yeah, and we're this is probably about to be the segue because really I believe that 99%, if not 99.99% of people that got into crypto basically, for the lack of term, want the easy button or want the easy money or want the fast money or whatever you want, however you want to spin that, right? And so for me, it's like if I had to learn how to make an LP or whatever it's called, like I don't know if I mean, yes, I'm pretty tech savvy. I could probably do it. Do I want to do it? No. You want to know why? Because AJ and the people over at DexFi have created a solution that we don't need to do that, right? So we just come over here, select what we want to deposit, put in deposit, and then boom, everything goes in. And once you do, let's go look at this bar right here where it says compound, profit token, et cetera, et cetera, et cetera. Once you deposit,
Yep.
then you have your amount of what you deposited. And then it goes to APY, daily, TVL, liquidity. While we're on this, AJ, let me ask you a question here. I mean, most people, let's forget about the APY, but let's just talk about the daily. The daily is, when it says percent daily, this basically means interest or rewards that you're earning on your deposit. Is that correct?
Exactly, yeah. So again, if you deposited $100, you'd be getting $3 a day in fees. And we do our best to be transparent and calculate that in real time, but just know that there is a bit of everything is variable. So even though that's 3% right now, in a week, it could be 1%, or it could be 5%. Like, every single minute of every day, that updates, because it's solely based on the volume. So if there, say, a lot of people are buying Banker and ETH, and there's a lot of back and forth swapping, then that yield goes up. And if it's a day that's like a Sunday or a weekend where people really aren't trading a lot of crypto, then that number will go down. But overall, it's been pretty consistent. And again, that's another reason why you kind of have to pay attention a little bit closer, because if the daily yield does go down, you may be better off putting that money in a different vault that's earning better. So, and then, yeah, the profit harvest and profit token, you're getting actual USDC. Again, when you earn the fees, you earn fees of the tokens themselves. So like when you earn from the exchange, you get Banker and ETH, but our software automatically just converts that into USDC to lock in your profit, and then pays it right to your profit tab. Every up to every hour, even. So again, it's always happening, and then there also is usually a small compound as well. So with liquidity providing, if you do 100% profit, sometimes it will erode your position. So even though you're earning a major APR, that the principal balance is going down a little by little by little, and usually the yield outweighs that anyway. but we tend to do at least a 10% compound because then you're still holding your principal position as well. So
So, and that leads into a question that I actually had. So, when it says compound profit, right, and then it says daily 3.14. So, in your example, you said $100 would basically bring you in $3.14, for lack of a better example, right?
yep,
So then, if we're at 90% profit, meaning taking profit from the reward, that means at the bottom where it says profit and available to claim, 90% of 314, I did that wrong. Hold on, I got a calculator out right now.
yeah.
Is like $2.82, right? So is that what that means? So if we got $3.14 in rewards, then 90% of that would be $2.82, and then the other 10% would basically go back and compound into our investment, right?
Exactly. Yep, you hit the nail on the head. So yeah, the daily yield is overall, and then whatever is compound profit is divided out. So yep, 100%.
Great, cool. I mean, and these are questions like I had. So, I mean, that's why I wanted to do this video with AJ, because I was like, let's just kind of get. I've seen some other videos, and I don't think the ones at least I've seen. I haven't watched every one of them, but the ones I've seen, I've never seen anybody go over this stuff. And so I wanted to bring some of these questions to AJ, and and get some answers here.
I love it.
So,
Yeah, bro. We're getting into the weeds for sure, bro.
yeah, we're making some moves. So let's just finish this bar off really quick here. When it says TVL, now I know there's like little question and answer things right here that pop up, but TVL, so this basically means the money that has been invested overall in this particular vault on DexFi.com. Is that correct?
Exactly, brother. Yep. So TVL is just the individual vault position. So yeah, absolutely. Yep.
Okay. And then liquidity, when it says 1 million, so that basically means that is the liquidity on the exchange itself that the vault is positioned in. Is that correct?
Yeah, so again, that's that $1 million number would say, and I don't know the exact breakdown, but say banker ETH LP on this particular exchange is, 300K, ETH SPX is another 300K, and the Giza USDC is another 300K. So that would be a total of $1 million in liquidity on all those assets. So, and it's only chain specific or exchange specific. So like banker ETH overall that liquidity is a lot higher like over multiple exchanges. So that's just for this particular subset. Yeah,
Right. Yeah. Gotcha. Gotcha. Um, let's talk about the risk level, because I mean, it's obvious what what these bars mean. If it's full bars, it's going to be super risky, et cetera, et cetera.
totally.
But
Yep.
like, is this more on like a scale of like a 1 to 10, or is this more of a scale like for lack of a better term, 1 to 4 bars? Like, meaning, is a number two bar, like, in your opinion, is that like okay, or is it more like, hey, we're like 50% to the risk level here type of risk?
Yeah, bro. So that again, amazing question. And yeah, I mean the risk level is definitely there to give you a little bit of help, but it's not something that you would rely on. So to answer your question, it is usually like a 1 in 4. So at a half bar where we're at here, I would say that's about a 50 percent risk. And that's because again, multiple factors, but the ranges on these are pretty tight. And you can see the daily percentage at 3%. Usually it goes where the higher the risk, the higher the reward. And that really is just how crypto is. So yeah, I would say, obviously these are still really solid tokens. Like we're really, really bullish on Banker and SPX. Giza is a little newer, but it's been performing really well as well. So I would still consider these more medium risk in terms of like assets, even to the lower end of risk. But really, the main determining factor in risk is the ranges. So these ranges are a lot tighter. You get a lot higher daily APR, that way, but you could suffer, some more impermanent loss. And usually, like the blue chip farms like Bitcoin, ETH, stables that the least amount of risk is like stable to stable, where we're farming USDC to USDT. You basically get zero impermanent loss, and but the daily yield is you're looking at maybe 10% yearly rather than 3% a day. So it's all relative.
Right, 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 right. Okay, question here. So there's, I don't know how many vaults are on DexFi now, but there's quite a few, and they all have different TVL, right? Because as we just discussed, the TVL number here represents what the TVL is for the vault on this, for DexFi,
For
not
sure.
not anywhere else. So if we're looking at the different vaults, and we see a number, for example, on this one that says 25, 0.75K, 25,000 ish dollars is locked. Does that mean, or is that an indicator then that, because this is going to lead into bonds, is that an indicator that, the DexFi bonds is positioned here? Because
Yeah.
I feel like if this was a low number, let's say this number was like 3 grand, right? Like, I'm not saying DexFi wouldn't be positioned there, but it seems like if the bonds are doing so great, as far as a lot of bonds are being minted, and obviously a lot of people are investing in the bonds, it seems as if that a lot of the money from the bonds is also registering here in this vault as we see it right here.
Yeah, so again, bro, it's an amazing question. And the short answer is no. So if you go back to the dashboard, I mean, this is a really great strategy for people that want to know what's happening. But yeah, so you can see 100 or 850 grand overall in TVL. These vaults are actually private vaults. So that is why we're able to dox the wallet and show the positions, but we're not in the public vaults, which is what you just showed, where people can see the ranges. So we're even fine tuning. I mean, we may use some of these vaults as inspiration. So like the one you just showed with Banker, SPX and Giza, we have vaults of all three of those, but we just tweak the ranges even a little bit more than what you see publicly. So, but what is cool is if you go back to the DexFi page and go to the homepage of the vault, not yeah, those yeah, if you just click there, it should come. So there you can see the TVL and active vaults right there in the upper left. Yeah. So that number does include the bonds. So we're always growing TVL. And even though we have private vaults, that is incorporated overall. So, that means that over $1 million or more now is from users that are just utilizing Dex vaults on their own. And that's where you see that 25K, in TVL. And if you sort by TVL, that's another good metric. And what I do a lot is if, TVL is a pretty good indicator of the health of the vault itself. So yeah, again, you can see GDEX. That's our own governance token, so those will always be at the top with a higher TVL. But the ETH REI, that has 41K. Usually that's a good indicator of some of the better vaults as the higher the TVL.
Awesome, I like that answer. See, now I've heard this stuff before, AJ. I've been on a million AMAs about the bonds at this point, but
Yeah,
I totally forgot. Like, oh yeah, that's right. The bonds vaults are basically private, and what we're seeing here on this page publicly, is for the public. So
exactly. Yep.
that's
And we could, I mean, we obviously the when you if you ever set up your own vault, that's the other really cool thing. Like to get even more complicated, anybody can go and actually create their own vault. If you click that little tab on the left cushion that's green on the far left. Yep. So yep. So you could even set up your own vault, and they start out as private, just like we would with our bonds. But then you can choose to publish them, and then they would show up in the main vault area. So yeah, I mean, again, the system is so robust. People really only know, about 10% of what we actually have built. And that was another reason why we did bonds, because it's just so much easier to explain. But if you were a hedge fund manager and you were managing, millions of dollars, Dex vaults would be your best friend. Like, it's only a matter of time until the big guys figure out that they can automate a lot of this with their own expertise. And now we have 100 million in TVL. That is the holy grail for sure.
And what AJ just said is super important if you're watching this video right now, because basically that means you're early into the game,
Yes.
because if you know what positioning is, and if you understand what early to the game is, and you know how to get in position once you're early in the game, you can, NFA here, not financial advice, but you can definitely make some pretty big moves. And I think that, or I believe that that's one of the reasons that, me and AJ are doing this video right now, is because, or this interview right now, is because we want to get the word out there. I mean, if this, and AJ, I totally believe this has the gigantic potential to go, gigantically big, and do some major things. And it's like, everybody should be paying attention because
Yeah,
if
brother.
you're not, you're gonna, and not that you can't, get some success from this and some rewards from this, but if you're earlier on in the game, you're gonna be way more far ahead than everybody else.
Yeah, absolutely, bro. And again, I mean, there are other software like this in the traditional finance world that only JP Morgan and the big guys have access to. But we have built it on chain, completely decentralized, where everybody can use it, and it's free. I mean, we take a fee from the yield, but we're not charging, $100,000 a year to access it. I mean, the software at JP Morgan and Chase, all the big guys use. I mean, you're talking millions of dollars a year in licensing that they have to pay, and we're providing it, basically for free, which is just crazy. I mean, once people really understand how robust DexFi is, it sells itself, bro, for sure.
All right, so 100, number one, 100%. And by the way, I don't know anything about this, JP Morgan, licensing this, that, and the other, and all this other. I'm not that kind of person. I'm not, I found this stuff on the internet one day and I got fascinated by it. And then I found AJ and I got even more fascinated by it. That's why we're here.
For sure, brother. Yeah.
So let's talk about the super easy button, right? The super easy button, as we started this video off, was about the bonds, because more than likely there's a lot of hype going on right now about it, and you researched it and you're here. And what we just went through with the vaults, might be, somewhat complicated. When I first looked at the vaults, I was like, okay, this, I could probably do it, but let me watch a couple YouTube videos, let me see what's going on, and blah blah blah. And then eventually what happened was like, what, I'm not going to do anything with that. The bonds came out, let me just, invest in that, and I'll use the rewards from the bonds to then put in the vaults, so I could get in the game in the vaults and just see how it works.
Totally. I
So
love it. You got your own flywheel, bro. I love it. Yeah, that's totally a great strategy. Yep.
yeah, so essentially, and AJ, you tell us, story. You're the one of the architects and leaders of what's going on here with DexFi. So just tell everybody this is the super easy button, right? I mean,
Yeah, no doubt, bro. So everything that we just went over for the last, 20 minutes, that is important because you understand, where the yield is coming from, you understand what we have built, and you understand the back end. Now, is the super easy button where you just literally mint an NFT. So if you right there, it says mint bonds. Right now they're about 0.08. When we first released them, they're about 0.01. and about $250 each. The reason they're down right now is that ETH is getting crushed. So you still get exposure to Ethereum, which is important because right now it's bad because it's down, but we're all still very bullish on ETH. And in the long run, we get to ETH double or triple from here towards the end of the year and all the cycles. Obviously, there's some geopolitical uncertainty right now, and unfortunately that carries over. But that is a great opportunity to mint bonds at even a lower level in terms of dollar value. And the other silver lining is when you mint here and price goes down, that usually means the APR goes up. So you're earning more daily, even though your principal balance might be down a little bit. But all that being said, you mint a bond, that ETH is then put to work for you. And again, Christian, if you click the TVL button and go back to DBank, you will see. So once the money comes in, we then allocate it to about 40 different vaults. So if you scroll down, brother, there is all the vaults. Keep going a little more, a little more, a little more. So there you go. So you can see all of these vaults we are in, and those are curated from us to be the best ranges, the best liquidity, the best upside potential, and ultimately the most volume, so that we're earning as much fees as we can. And by being in again about 40 different vaults, if not more, we're well diversified. So say one of those vaults is stops paying, or even God forbid, like the token crashes, the overall fund is still really healthy because we're so diversified. Now, obviously, ETH is still reliant on that. We still need ETH to perform well, but all of us again are pretty bullish on ETH, and even if we stay sideways, so say that we stay at these levels for the next 6 months, you're still earning roughly 10% a month in yield, even with that. So the yield always outweighs the downside pressure in the short term, for sure. So
And I think that's alpha on its own, AJ. I mean, let me put it this way. Again, I think one of my superpowers is being able to explain things in a way that just clicks for everybody, right?
by all means, bro, that's my anti-power. So yeah, please share away for sure.
So when I first heard about the bonds and AJ was explaining that you get exposure to ETH, right? And when the bonds first launched, forget about what the ETH amount was. Let's just talk about price because that makes more sense to everybody, or at least for me. So it was at about the price it cost per bond was about $250. Okay. And so AJ was explaining AMA after AMA, you get exposure to ETH, meaning if the price of ETH goes up, then the bond that you bought, for example, at 250 could potentially be 300, 400, 500, right? So I'm like sitting there thinking like, so you kind of like got to think about it as if we're still holding ETH in our wallet, but we're getting the price appreciation. And at the same time, we're basically getting yield. It's like staking ETH, right? Like we're basically getting yield from our ETH, right?
Yeah, Christian, I love this comparison, bro. And it shows me that you have a big brain, man. You're connecting all the dots. So yeah, and this is kind of what I mentioned earlier. 90% or more than that probably people think that crypto is just buying and holding a token. And obviously I am a big supporter of buying and holding. I don't ever recommend like leverage trading or any kind of super high risk moves like that, but you always want your capital to be working for you. And so, yes, to your point, rather than just having ETH sit in your wallet doing nothing, you're able to deploy this ETH and then earn for doing so. And again, it's not as black and white as that because obviously, there is a little bit additional risk because if some of the vaults that we're in, underperform, ETH, then it could erode some of your actual ETH. But even now, I mean, the market is an absolute mess at the moment, and we're really not down that much. I mean, last week ETH dropped by 10% in 2 days, and the overall fund value itself only dropped about 6%. So we're also protecting the volatility because we're in so many different LPs and diversified that way. So, and again, what I feel is a short-term, bottom, meaning the upside potential on ETH and alts is way, way higher from here. And again, that is a personal opinion. Always do your own research. But you're right. I mean, again, Christian, if you can put ETH to work, earn, and then even, use some of your rewards to just buy ETH again, and build your liquid holding of ETH, as you go. Like, there's very many ways that you can hedge against the risk, for sure. But yeah, man, I love that. I love that you are putting two and two together for sure.
Yeah, because when you were talking about it, I'm just sitting there thinking like, wait a second. So, and by the way, so if you buy a bond, right, and then it gets auto staked, right, and then you start earning, right, and let's say in a couple months from now you want to sell one of your bonds or more if you have more than one, right? But let's say at that point in time, now your bond's worth like $400. Well, now you get cashed out for that amount of ETH, $400 or so, or by the way, minus 10%. We're not gonna. Maybe you could talk about that in a minute, AJ,
Yeah,
if you want. I mean, there's so many details to this that I don't want to make this video a million years. I just want to
totally, bro.
I
Yeah,
want to hit the punches, so to speak, or I want to hit the high points. But in a couple months, let's just say your bond's worth $400 and you've been getting the yield from it, like where else are you really going to get that, in a safe, environment? When I say by safe environment, I mean from the team concept, from the people that are leading DexFi, AJ and
for sure.
Jake and the rest of the team. So for me, I was like looking at this, I'm like, holy smokes, I could just buy, time the market. And right now, by the way, not financial advice, but the first bonds were going for 250. Now we're at 183. Like you could really make this into something really, really big.
Yeah, bro, no doubt. So let me just touch on a few of that. Number one, yeah, the redemption, again, not to get too much in the weeds, but it's really simple. We do charge a 10% fee on redeeming your bonds. You get paid back in ETH directly within 48 hours, but that 10% doesn't go to us as a team or the protocol. It goes to all of you that hold bonds. So this is another really cool gamification element, and protection, where if a lot of people start cashing out, when ETH doubles from here, and bonds are all in profit, um 10% is left over in the fund. So now all of you are earning on 10% of the money that you've never deposited. So it automatically puts the APR up, and the actual bond value up as well, because it's over collateralized. So that's really cool. And if, again, I mean, it could be an extreme scenario where half the people withdraw, even if there is a blow off top or whatever, and half the people exit. That means the other half, have nearly, what is that, 40 grand more LP than they would have otherwise. So it's really cool when you think about long term as well. But yeah, so that's a redemption. And yeah, I mean, I think that if you're looking to just get in and out of bonds, it may not be for you. You definitely need to be in for at least a month to make up the withdrawal fee. But right now in the middle of summer, if you believe in, a little bit of extended cycle theory, or if you're bullish on crypto at all, we usually see, the real bull run going into the end of the year, after the halving, which was last year. And again, I mean, other than the geopolitical and tariffs and what might be out there, rate cuts, overall, we usually see crypto, have a blow off top around October of the following year. So I think that right now is an incredible time to DCA. And like I said, even if it stays where it is, and ETH is already way underperforming Bitcoin, the upside potential is definitely a lot higher, and you're earning every single minute of every day from the fees anyway. So
And speaking about that, I'm a degen by heart, man. Like when I first got introduced to crypto, I mean, it was really like very degen,
for
like
sure.
me and you have talked about BitConnect before, and that was totally degen, even though I don't even know if that term was even out yet. But you know, for me, it's like, man, I what I do is AJ is like I got my bonds, I come and get my rewards, right? Then I head over to the vault page and I go over to I think the one I'm invested in. I'm invested in two, but the one that's higher is the let's see which one is it? Um oh yeah, it's the Giza one, wherever that one went. I don't know where that went. Oh, did I press the wrong button? Probably.
Yeah, there you go. Yep, that one. Yep.
Yeah, it's this one. It's get jizz with it. Get giz with it, whatever.
Yeah, I love it. Yeah.
That's the one I'm in. So I basically just take my rewards, come over here, deposit my USDC rewards, and here we go. I mean, there's just I think you call it the infinite money loop, right, AJ? Is that
Yeah.
what you call it?
Yeah, bro. So a lot of our protocol is based on what we call flywheels, and sometimes we call it the infinite money loop. Again, as a kind of a tongue in cheek, some people think it's a little bit out there, but yeah, man, that really has always been our goal is to always keep the momentum and yield within our own ecosystem. So having bonds generates yield, and then you can use that yield to go into vaults. You can use that yield to go into EMP Fusion. You can buy a GDEX. You can buy Bitcoin or ETH. I mean, it basically creates a revenue stream for you to do what you want with. And I'm a recovering degen myself, so I get it, bro. I'm in the trenches with everybody, and where I made my most money in crypto, again, a lot of people know my story already, but I started with a game called Spinnerlands, and I turned $10,000 into about $1 million worth of assets. But those assets, I was able to rent them out, just like a rental property in real life, and I produced, upwards of $100 to $500 a day from doing that. And so now I don't have to bring in new capital to crypto. I live off the yield. And, even in my real life investments, that's the holy grail. Like you want to live off the yield and never touch your principal. And so having a flywheel set up like this is massive. And bonds do that. You put your money in, you get paid out. Every again, if you have enough bonds, you get paid out. You'd be making $1 a minute if you have enough bonds, and then yeah, you take that money and you can put it wherever you want, or use that money to pay your bills rather than trying to go the other way around, where you're putting your paycheck into crypto, which you should never do. Overall. So
Wise words, AJ. Wise words. I was just writing down as you were talking. I was writing down an idea you just gave me for another interview slash video I want to do with you.
I
Um,
love it, man. Yeah,
regarding your assets for gaming. But man, if again going back to this whole thing about if you're watching this video now, you're early. This is why I'm saying you're early. Like if you can get whether you and if you don't have enough money to buy a bond, put a little bit into the vaults and get in the game, right? Just see how it works. And then take those rewards and either build it up to buy a bond or put in another vault or whatever. Just get in the game and create, as AJ said, that flywheel and see what happens. I mean, some people, AJ, are watching this video and they're in their teens or in their younger 20s, right?
totally.
And I wish I was that age. I'm not. But if I was that age, I'd be like, man, 20 years from now, I can have hundreds of thousands, maybe even millions dollars worth of crypto assets just from this alone, just by starting now.
Yeah, absolutely, Christian. And again, the numbers get mind-blowing, and almost too good to be true. And obviously, again, nothing is guaranteed. Everything is variable. But even in a bear market, like we've been doing this now for 3+ years, with the tech we've built, and the APR has still been leaps and bounds higher than what you would get in any traditional market. So, again, I think it is about risk tolerance and diversifying, but for sure, I mean, if you start young and we were just talking about this a little bit earlier about time in the market rather than timing the market is really long term is successful. All of us can get lucky on a moonshot overnight, 100x holy grail, but that is very, very rare. And unfortunately, because of influencers and KOLs, that's what all the young kids think they can do in crypto. But really, fundamentally, if you're focused on real yield and earning and protocols like this, you can set yourself up for literally generational wealth in the long run, for sure.
100%, man. So really quickly, if you wanna, we already kind of really showed how to get into the vaults, but the bonds is super easy. All you got to do is connect your wallet to the site. You're gonna come over here. You're gonna, you know, pick how many bonds you want. One, I think, how much? What's the max? 150, AJ?
Yep, so for the minimum is 1, obviously, and yeah, max is 150, but then you would just be able to mint another round of, 150 every time. Yep.
And you know what, AJ? I was sitting there thinking on one of the AMAs that you guys did, and you're like, yeah, the max is 150. I'm like, man, I know there's some crypto ballers or some whales out there, as we call them in crypto, out there. But I'm like, why? It's like 150, really? Like, is really someone gonna come here and buy 150? Then the other day I saw a video. I think his name's Crypto Slow,
Yeah, man,
and
so
I'm looking at his positions, AJ, and I'm like, holy crap, he got like 100. Like, damn.
yeah, Christian. Yeah, man, Slow is a big a crypto YouTuber that we go back, and again, man, so funny. Guess what both of our first protocol was? BitConnect. So, yeah, man, we go way back for Slow, and yeah, he came in real heavy, about 100K into treasury bonds, and typically we wouldn't dox anybody, but he did a video about it, so he's one of our whales, and yeah, man, the cool part too, again, just not to get off topic, but uh, with concentrated liquidity providing, we don't dilute ourselves. So usually with like traditional yield farming, if there is a big whale that comes in, that means APR goes lower because there's no rewards for them. But because we're doing V3 and earning fees and not a token, we're able to handle literally, hundreds of millions in TVL. So, we can definitely scale from here very easily, for sure.
That's crazy, man.
Mhm.
That's crazy. So, if you're gonna buy a bond, you'd click how many you want. You would click mint. This would say mint if your wallet was connected.
Yeah.
Then you would, basically sign the transaction on your wallet. It'll go through, provided you have enough money, and then it gets auto staked here. You don't have to do any staking, any separate staking. It gets auto staked here. You would, I usually have to refresh the page, AJ, once I do a mint.
Yeah, brother. It's so funny you say that. So we're working on an auto refresh. That's been a bit of a feedback from the community. So yeah, when in doubt, always refresh. But we're working on that too. So
Yeah, so you refresh, and then it'll say your position is one, or how many ever bonds you bought, and then it'll say, basically how much your position's worth. Now, I have a question about that. So my question basically is, AJ, and I know the APR is variable, right? And I'm not, it says 110.47% right here, which is yearly, by the way, for everybody wondering. And if you break that down, let's just round it, AJ. It's roughly 10% a month, right?
correct, brother. Yep.
So, for example, let's say we have a thousand. well, here's my question. Since the bonds are, they're selling at different prices right now, right? Um, when if I buy one right now for $184, does this my position reflect right here $184?
It does, yes. So this is really cool, and I'm glad you brought this up. And again, I tend to overly complicate it, so maybe you can use that superpower and help me tell everybody. But yeah, man, this is some giga brain math that makes this even more bullish. So the APR is based on the overall fund value divided by what you're getting in yield, what the fund, the wallet is getting in yield every day or every week or whatever. What we don't take into account is individuals. So if you mint a bond for, say whatever, again, rounding, say $200, not only do you get the price appreciation going up, but as the fund value increases and APR stays roughly the same, you're actually getting a much higher APR when you look at what you paid in dollar value of the mint. So that is a really cool thing that again can lead to some insane numbers. Because now you're earning APR based on a price appreciating asset. And if you just look at dollar value of what you minted at, APR could be in the 300 or 400 range, easily when ETH doubles. So does that make sense, Christian? I hope that explained it. Yeah.
I, I, well, let me ask this. The the question I really have is so let's go back to the $1,000 example, right? Let's say we have $1,000 worth of bonds, whatever number that might be,
Yep.
and we are earning roughly 10%, right? So that would be $100 per month, right? We're doing the math right there, right? So,
Yeah.
so are we really? I mean, that's just kind of like what has been conveyed, at least to me, or what I've got from other AMAs, is how much ever our value is here, we're roughly getting 10% on this value. But is that
Yes.
really, is that, is that kind of like, I mean, like I think you kind of just answered the question in that, like, because there's so many different variables, that's actually, I mean, I think on average is 10%, but roughly it could go up or down a little bit, correct?
Yeah, so again, it would go up and down, but I think the core of what you're asking is it is based on your position. So, again, let me try to explain the two ways. Number one, you're minting a bond at $200. Now you're earning 10% on $200, which is again roughly $20 a month. Now, if ETH goes double, now you're earning 10% on $400 because again, APR is calculated in dollar value, not the ETH value or the ETH, token number. So now that translates into a 20% APR when you minted for 200. So again, it's a compounding effect where yes, the APR will always be, around that $100 or 100 to 150. I mean, some months are more, some months are less. In a bear market, it might go down, to the 50, 60 range, but you're always determining the APR overall on when you minted the NFT. So it'd be really important, and we may end up updating that in the UI, but it's really hard to calculate APR for every individual user. We would have a $1 million server fee for that. So we can't really do it based on wallet, but you can track it on your own, and that's even more of a reason that you would want to mint at lower levels with ETH. So yeah, does that help? I hope hopefully that helped
Yeah.
again. Yeah.
Number one, 100%, it answers my question.
Mhm.
And number two, at least I myself just heard some alpha that I don't think I've heard on anybody else's AMA video or whatever, because I definitely heard the alpha before that, hey, if we buy a bond, like let's say right now at 184.57, and let's say in a couple months it doubles, and now we're at 360 or whatever it might be, and we cash out that bond, well, now we just made $180 or so on that bond plus the yield. But what you just said is something I didn't ever hear or even realize, which is if the bond doubles in price, so let's say it goes up to 360, now our position is earning is earning 10% on the 360 versus the 184.
Yes, brother, I love it. So, yeah, and again, this is why I love doing AMAs. So I'll go over that on our weekly AMA, courtesy of you. I gotta give you credit, man. Because yeah, we really never went into details on that. Again, sometimes I'm a little too close to the chest. I don't even think to say the variables. But yeah, that is absolutely the case. And again, I mean, we're able to do that sustainably because all the LP positions that we're providing for, they go up in value on their own. So again, the APR, no matter what the actual dollar value is, the APR can still scale when, we go up. Like for instance, we get $1 million in TVL and ETH doubles. Now there's $2 million of TVL. So it really is cool when you think about the multiplicity effect of all that for sure.
Wow, just wow. Like, I mean, this is so interesting.
Mhm.
Again, I just realized while I'm talking live with AJ that, you know, if the value of the position goes up, then basically your APR is could possibly be doubling and you don't even realize it.
Yeah,
That's
bro, 100%. So, and again, I mean, there are variables, uh, yeah, and just be aware nothing is guaranteed, but theoretically, that's how the math works. Yep.
wow. AJ, thank you so much for your time today. I super appreciate you. I know we went over how long we said we were going to do, but I believe, like I said, I got some alpha out of this that I've never seen or heard anywhere else. So I'm glad we discovered that treasure.
Yeah, no doubt, bro. No, I appreciate you. And yeah, again, I mean, on that note too, another thing that's cool, just one last little point, you know, the whole idea is that we want bonds to be around forever. And so, the reason that that multiplicity effect works is that when you mint a bond at $500 a bond, you still need to have an attractive APR. So that APR is still, 100% or whatever it might be for new users as well. And so again, that just demonstrates the power of minting while things are down, and the overall market going up. Granted, you have to believe that crypto will go up. Obviously, we had a little bit of a bummer. We launched and ETH went down, but even during the stream, the overall fund value is up about 10 grand since we started. So yeah.
Yeah, it's crazy. I remember when I first bought a bond, like that mint number. I don't even know if it was in the thousand yet. Like I think it was like
Yeah.
900 something when I bought one or something like that. But
Yeah, man, totally. And as long as you see that total bonds minted going up, that means more and more value coming in. But even if that number stays the same, we're earning yield every single minute from the wallet itself. So yeah, totally.
well, AJ, I'm gonna go now that I just discovered this treasure, so to speak.
Yeah,
I'm
man.
talking to you. I'm about to go buy some more right now after we get off this call.
Let's go, brother. Absolutely. And yeah, make sure that you join us on our weekly AMAs too, brother. I really appreciate you doing the video. I know you're always there, but for the rest of your audience, we're always super available and transparent. No other concentrated liquidity farming protocol. First of all, there's very few anyway, but none of them show the actual wallet and the positions, which is unheard of. So again, hopefully that transparency really, is a confidence builder in what we're actually trying to do here for sure.
Yeah, and really, AJ, that's the whole reason I'm even here doing this interview is because if I didn't believe in you and the team and Jake and DexFi and all the stuff that you guys are doing together, it's like I wouldn't be here doing this because like I have my own reputation, on the line and whatnot. So
Totally.
again, thank you, brother. Really appreciate you. And everybody, I'm going to leave the links underneath this video to, go check out the bonds and DexFi and the vaults and things like that. So head on under the video to check that stuff out. AJ, nice talking to you again, brother, and we'll talk very soon.
All right, cheers, man. Talk soon.